It's Thursday once again. Let's take a look at some legacy charts for Brave New Coin. And unfortunately, the VIX spiking up here on Omicron variant related news and headlines around the world. And that means the expectations for crypto are more bearish than bullish because of rising VIX signals risk off behavior, fear-like behavior. None of the correlations make sense still. Gold down significantly. DXY kind of hanging flat. We'll take a look at all those. The correlations with SPX and NDX are back at highs for BTC, which is problematic if you think the SPX and NDX are due for a pullback. I guess I should clarify. Problematic if you're bullish. All this stuff is problematic if you're bullish. Such as myself, positioned 100% all in crypto, no cash right now. My thesis continues to be we have 28 days to do something. Q1 should be bearish. So it's a little disappointing to see VIX pop up like this, but it is what it is. DXY correlation spiking to multi-year highs. Like, again, this makes no sense whatsoever. You don't want to see this. You don't want to see this negative correlation with gold. The 10-year note correlation is just kind of muted. And the Nikkei correlation has declined a little bit. But all this looks bad. There's nothing here that looks bullish whatsoever on these correlation charts right now, especially because even the Dixie is potentially setting up for bearish reversal. So over the past few months, it broke out of this triple bottom inverted head and shoulders thing, cloud edge to edge move, right? TA applies on any time frame, any pattern, any chart. Pick anything you want. Pick something from 1875, and I guarantee you're going to see the same chart patterns and the same behavior with price there. So there are two reasons I'm more bearish than bullish on the DXY here, because one, it hit its target, it hit the measured move, it hit the multi-month consolidation target between 96 and 97. So that certainly satisfies the chart pattern, the consolidation. The edge-to-edge move has played out, and these candlesticks on the surface don't look bearish, but the previous week was an inverted dragonfly or shooting star. This week it is a spinning top, and past 2 weeks combined, you could say represent a tweezer top. So that collectively isn't so bullish. You could even reasonably expect a pullback down 93 based on this TK disequilibrium. I don't know if that will play out. It may take all of 2022 to play out, but the least likely expectation is just a continued pop with price sitting where it's sitting. I wouldn't want to be long this. Looking at that chart, it needs to relax a bit. And gold on the weekly, you can look at this on any time frame. It looks garbage on all of them. This thing looks like it wants to retest the 200-week moving average at this point. Just a refusal, an inability to break out. Every pop has been shot down very quickly. Still pretty high volatility for gold by the looks of it on the weekly. And cloud is likely to flip bearish in 2022 if this thing can't rise up again. And historically, this thing has had long stretches of bullishness and bearishness. So it's definitely neutral at the moment, but a retest of other edge of the cloud or the 200-week, it's certainly not out of the question. For gold, silver is a mess as well. Crazy volatility here. In and out of the cloud. Probably going to retest the 200-week moving average at 21, whatever that is, as well as that flat cloud level. You always know you're in trouble when chart patterns with a bias do not play out as expected, like this ascending triangle here. When that broke down, that was your first signal that maybe this thing's in trouble. And ever since then, I've just been unable to gain any steam whatsoever on the weekly. SPX and NDX both they've looked toppy for months, but they're just continuing to look toppier and toppier. Here's a run-of-the-mill bear div on the weekly. Higher high in price, lower high in RSI. You have a TK disequilibrium. I wouldn't quite call it a C-clamp because it is still rising. The reason the flatness is important is because that just represents no momentum. Typically you go up, you get no momentum, and then you drop. So it's still probably a ways off from that, but I don't think it would be unreasonable to expect something in 2022 to retrace to around 4,000 on SPX. NDX bear div as well on the weekly. This looks more like a TK disequilibrium. I mean, we had an insane TK disequilibrium here. flat and everything, and it just went higher. So the trend is your friend until the end, and the SPX and NDX are perfect examples of that. If you've been shorting this on the way up, you are in the poorhouse. You're flipping burgers because you've lost all your money. That's why it's extremely hard to call a top on something like this. You can say there are conditions at which this thing probably doesn't continue to scream higher, but to say it's the top is very tough. Flipping gears to some individual stuff, GME had a brief pop, got retraced in and out of the cloud here. It still looks fine to me. It's still above the 200-day moving average, as crazy as that sounds. And I don't hate this target, 500, 600. It's GME, I know, but I don't hate it. AMC, this is the Omicron effect right here. You can see it getting clobbered below the cloud, below the 200 now. So that's not really a surprise. It didn't look like it was going to do anything before the breakdown. It looked weak. It looked ready for some bearishness anyway. Whereas, it didn't have what GME had. If we're just paying attention to meme stonks, and Robinhood is just getting crushed day after day here. This is a 2 hour, and even on the 2 hour, you can start to see this TKC clamp, right? These are flattening out. So you have that on your side. If you're long, you have a bull div. I don't hate a long here. The model of Robinhood doesn't make any sense, especially if Doge specifically isn't an active market and they're not releasing or adding any new crypto markets yet. I don't think they have SHIB. I guess I can check, but what they need to be doing is just adding all of the junk, all of the crap, all of the flavor of the week stuff continuously, nonstop, in order to bring retail volume. The other part of this is all the stimulus money at this point in time is probably gone for most people. Things that people were gambling with, probably gone. Inflation is up. That puts a crunch on spending for people. So there are probably fewer and fewer retail participants in Robinhood, if I had ventured to guess at this point in time relative to months ago. But this is an epic decline from highs of 88 or whatever this was. But as a trade setup, it's pretty decent on the 2 hour. As crazy as that might sound. Coin also getting clobbered here. It had this rising wedge characteristic, bearish TK cross, and boom, right through the cloud. Now it's below the cloud, below the 200 on this time frame. And support is all the way down here between 221 and 261, previous consolidation area. Does not look bullish, does not look good. It could just Eiffel Tower right back down to 250. You can see RSI is getting into oversold. But this is kind of a broader macro view of crypto as a whole. It just doesn't look good right now. For most things, MSTR, kind of BTC-like, just failure to break out, failure to have continuation here. Potentially bearish on the ETFs that are available now because you don't have to use MSTR as your ETF vehicle. MSTR announced that they bought a bunch of BTC earlier this week as well. I can't really see that on the chart. Doesn't really seem to matter. And this 800 level, 810, is still the level to watch, I think, on the upside. This thing has been a ranging mess, but it also has this rising trendline characteristic to it. So I don't think it's all over for MSTR just yet, but I would definitely watch for lower lows or that 810 level. Tesla continues to meander around the measured move target based on fibs. Took the high, took the low. A lot of charts look like this in crypto land pre-breakout. ETH being one of them, Matic, BTC even. Now Tesla on the 4 hours setting up for this inverted Adam and Eve. It's probably safer rather than not to call this thing Dunzo for the moment. I think a lot of people have been taking profit up here. You can even see it had a TK or Kijun bounce. Always interesting to see that when you're not necessarily looking for it, but did bounce on this level. The next step for this thing would be a move between 1050 to 960 as a edge-to-edge cloud move thing there. But I wouldn't expect a bullish continuation from there on out. And so many things, so many stocks look abysmal square below the 200, below the cloud on the daily. And, this was, if you're paying attention to this on a daily basis, it's obvious that the weakness is here as it drifts lower like this below key trend metrics. I like this 160 yearly pivot target. I would watch for bull div on RSI, but you can see the RSI is still stuck within this downward trend. Never a good sign if you want to be bullish on something to see this. So that absolutely got clobbered. Twitter, Jack Dorsey stepping down as CEO. Twitter getting clobbered again below the 200, below the cloud. And it has just been a bloodbath for Twitter. from 68 to 42 in a matter of a couple months here. RSI approaching all-time lows. It's back in this previous consolidation range. I'd probably wait for a bull div on this, but wow, just a breathtaking decline there. Disney, also Omicron related stuff, most likely. You can see this was Corona March, just getting clobbered, 180 to 140 in a matter of weeks as well. Again, it was below the cloud the entire time. It was setting up for weakness for weeks and weeks and weeks, for months, since April, really. Finally, the cloud was proven correct, so currently it's in this support area on VPVR and the yearly pivot. RSI could be at all-time lows. I'm not actually sure. I didn't check that, but it could be. Always a good sign that panic has truly set in. Here's GBTC, and this actually looks much better than the spot BTC chart. This, if anything, looks more and more like a cup and handle on the daily. It's still above the clouds, still above the Kijun. The measured move for this is still between 72 and 84 on GBTC, which would be 7,000, 8,000 on spot, thereabouts. Looks fine. You know, you don't want lower lows, you don't want prices into the cloud, you don't want to break yearly pivot, but where this sits, it looks okay. It doesn't look amazing, but it looks okay. ETH, same thing, looks fine. Looks like still plenty bullish, above the yearly pivot, above the cloud, above the 200. I don't have that on here, but measured move for this would be between 55 and 65, which would be 5,000 to 6,000 on spot. Looks completely fine. You don't want to see this thing break below the diagonal trend line here, below the cloud, all that good stuff. Fine for continuation. CME futures contract made a rollover a couple days ago. Had a little bit of bumpy ride into that and out of that. And the next rollover is actually this multi-year, December 30th, 2019. What a ride that has been for anybody holding since then. I doubt there's anybody who's still in CME futures from December 30th, 2019, but there could be some miners all the way back here who've held through Corona, who've held through previous all-time highs, held through the drop, held through the new all-time highs, and at the end of the year are going to get rewarded with some crazy multi-year gains there. It'll also be interesting whether or not they introduce an additional multi-year contract. I don't really know how that's going to work for them, but they may put another 2-year futures contract when this one expires. And the next rollover date, again, would be the end of the year. So that's always something to pay attention to. That's all for this one. Let me just mention the ETHBTC fund and DeFi portfolio I trade for Techme Capital on Enzyme.finance, a non-custodial portfolio management tool, where you can see everything, including AUM performance allocation, all the trades I make in the trades tab down below, as well as some vaults that I'm occasionally in on UniSwap and Aave. That's all for this one. Like, dislike, comment, share, subscribe, and happy trading.